Welcome back to the Talking Hedge. I'm Josh Kincaid, and this is your Cannabis Business Podcast. Today, we're going to look at how you can position yourself for an inevitable cannabis capital crunch, look at some cannabis ETFs and stocks, and ask if they're the next shoe to drop after some failed IPOs. And USA Today says that there's a cannabis stock bubble bursting and gives you a list of what you need to know. But first up is this Yahoo Finance article about cannabis companies acquiring non-cannabis businesses in an effort to bolster CPG offerings and other investment trends. Last week, capital raises included U.S. multi-state operator Ianthus Capital Holdings and multinational operator TerrAscend closing a debt tranche of $20 million and $10 million respectively to accelerate the development of their existing infrastructures. Debt raises by operators with more significant asset bases continue to outpace debt raises across the rest of the cannabis space, and they expect such deals to continue, particularly given the pullback in the public markets that's occurred over the past several months. I would also attribute that to a sense of confidence in the marketplace, as well as maybe a lack of opportunity. There's a lot of shifting in funds right now, a lot of asset reallocation, a lot of uncertainty in the marketplace, and so you're not seeing as much equity. I think that's a good thing if you're able to get debt that's confident in the marketplace. It's normalizing it. Pennsylvania-based provider of extraction equipment also got a $10 million mezzanine debt to build out various processing facilities in Pennsylvania, New York, and Colorado. In terms of the mergers and acquisitions last week, the cannabis companies, particularly those developing CPG product portfolios, continue to acquire non-cannabis related businesses to bolster their offerings. In this case, a leading Canadian cannabis producer, Canopy Growth, acquired a major stake in the sports nutrition company BioSteel Sports. And this article from the New Cannabis Venture by Alan Broxley lays out how to position yourself for the cannabis capital crunch, saying that, quote, the past week was one of the worst for the publicly traded cannabis sector in years, with the global cannabis stock index losing over 11%. It's now down 13.4% in 2019. And it has returned to levels from more than 2 years ago. This is definitely on trend from what we've seen from March of 2019. There was a huge push. It was almost parabolic straight up. And so it was only a matter of time before those investors kind of took their profits off the table. And we've seen a retracement of at least 61%. So within the next week or two or next month or two, I think we're going to see the bottoming out and an opportunity to kind of get in and possibly ride an even wilder wave as everyone else is liquidating their portfolios. There's asset reallocation. There's uncertainty in the marketplace. If you look at SEN stocks in times of uncertainty, people will go to SEN stocks. That's cannabis, tobacco, defensive stocks, alcohol, pharmacy. So I'm sure there's just one wave of many to come. This article goes on to say that in late 2018, the rush by the multi-state operators to go public flooded the market with stock, and prices dropped in the fourth quarter by 48% from the end of September until the lows of late December. They remain positive over the long term, but they think that several factors will continue to weigh on stocks in the near term. First, vaping issues represent a big threat to the market. Consumers will likely reduce consumption, that they could see more regulatory action that would curtail sales. And second is a tax loss. Selling may be an issue this year, given that large amounts of capital gains generated early in the year. In terms of opportunities throughout the year, they've seen suggestions that investors would shift from revenue to operating profit as the key metric, and this has been playing out. So if there's one big takeaway that they can leave for the readers of this new Cannabis Ventures article, is it's never been more important in this sector to focus on cash flow and balance sheets. Many companies would struggle to survive if the capital markets remain closed to them, while fundamentally sound companies with strong balance sheets and minimal cash burns are seeing their stocks pressured nonetheless. Those that can pursue their plans, even if scaled back due to market conditions, will likely provide big returns to their investors once the storm passes. One example is WeWork, $47 billion valuation, probably worth $3 billion, running out, buying stuff, not really having a plan. Very similar to Canopy Growth. The CEO was let go, put together a lot of deals. Those deals didn't necessarily generate a lot of revenue. And then when looked at it from a shareholder's perspective, it didn't work out. So he was let go, wasn't able to turn those deals into actual revenue. So this Yahoo Finance article asks where the revenue is at. Dude, where's my pot ETF returns? An exchange traded fund is kind of a portfolio. So this year, ETFs have seen a wave of cannabis-focused ETFs come to market. This article goes on to say, quote, a company with plenty of headlines and market noise. What seems unthinkable based on regulatory security of the business of cannabis is not only reality, but is quickly becoming a crowded niche space. However, issuers have been undeterred with 5 cannabis ETFs launching this year following the precious lone entrant and biggest ETF in this space, the ETFMG Alternative Harvest Index, which at one point of this year had topped 1 billion assets under management and currently holds 826 million. The newcomers to the cannabis ETF party this year are Advisory Shares Pure ETF or YOLO, 48 million in assets under management, the Cannabis ETF, 19 million, Cambria Cannabis ETF, 9 million, Amplify Seymour Cannabis, 5.5 million, and then Global X Cannabis ETF at 2 million. YOLO and CNBS are both actively managed in their REST track indexes. So, what is the outlook? They say that behavioral investment wonks would be the first to say that now is the time to be buying. The cannabis markets will grow larger, eventually become more natural, legal in more places, including the US. The world has come to grips with cannabis as both a legal product and now an investment vehicle. But according to the Investment Business Daily, here's 3 major headwinds facing some cannabis stocks. You have the cannabis industry growth set to pause in the second half, potentially flattening, a trend that they think could be the case with Canopy, and yet the street's modeling strong double-digit sales growth quarter over quarter. The second is a flattening growth, which could make other targets harder to achieve. And then finally, the vaping scare could hurt Canopy growth stock and cannabis stocks, impacting on sentiment in the near term. And according to Investopedia, cannabis ETFs and stocks may be the next shoe to drop after some failed IPOs. Speaking of headwinds, the BMO Capital Markets was the latest this week to write a downbeat forecast on Canadian industry giants such as Canopy Growth, Tilray, and Aurora, expecting them to suffer negative cash flow into 2020 as they combat headwinds such as shortage in retail stores and weaker than expected growth of new products like vapes and edibles, as outlined in a Barron's report. Cannabis ETFs could also see downdrafts. The ETFMG Alternative Harvest was a proxy for the cannabis market, declined by 48% since March. The ETF and its component stocks aren't extremely liquid, which makes them vulnerable should big investors decide to unload their shares. So if the cannabis bubble is bursting, here's some things according to USA Today that you should know. Quote, while there's no official or concrete definition that describes when the party is ended for a hot industry, I'd call nearly 50% decline in the Horizons Marijuana Life Science ETF, the first exchange traded fund focused on cannabis over the past 6 months, pretty much compelling evidence that something is amiss. The Horizons Marijuana Life Science ETF holds more than 5 dozen pot stocks of various weightings, so it's a pretty good indicator of industry sentiment and performance. During the month of September, it generated only 6 stocks that rose in value out of the 59 that are tracked, and just 3 pot stocks are higher over the trailing 12 months. So there's little denying that cannabis bubble has burst, but it's important that you understand that some of the nuances surrounding this precipice decline. So here's 3 things you need to know. One is this was expected. Investors should understand that the bursting of the cannabis bubble was expected. Over the past quarter century, we've witnessed a number of next big thing investments come to the forefront, such as the internet, genome decoding, business to business commerce, blockchain, 3D printing. Each and every instance, hyperbolic moves in the companies underlying these trends failed, eventually paving the way for a precipitous decline. The thing to realize about the nascent industry is that they all need time to mature. Number 2 is that the long-term growth strategy for cannabis remains in place. The second thing you should understand is that the pie in the sky growth estimates for the pot industry over the long run are still very much in play. Canada's supply problems and licensing backlogs are all solvable problems. And likewise, it wouldn't be surprising to see a select US state tinker with their marijuana taxes rates to entice consumers into legal channels. Nothing about these early stage problems represents a long-term concern for the cannabis industry. And number 3, it's unclear what companies will ultimately be leaders. While this is probably an unpopular opinion, investors should realize that it's just far too early to know which pot stocks are going to be the long-term winners and or leaders in the industry. History tells us that some of the biggest long-term gainers in the next big thing industries are small cap companies today. That means that the canopy growths of the weed industry may not make it for the best investment. Take WeWork, for example, take MySpace, for example. A lot of the first movers don't make it. And that's why there's a lot of companies that would rather kind of ride on the coattails of somebody else to make them the trailblazers, spend all the money on advertising, marketing. Um, there's a really good business case of Burger King coming in and looking at McDonald's and where they are at geographically. McDonald's is known to spend hundreds of millions of dollars to figure out where to go. And then Burger King just finds out where they're at and plops one down next to them. So, what should you focus on as a cannabis stock investor? There's clearly a lot still to be sorted out as the cannabis industry matures, focusing on small cap cannabis stocks with apparent competitive advantages and a smart way to set yourself up for future gains. If investors think long term, then the bursting of the cannabis bubble won't be a big deal. Very similar to what we saw with Bitcoin, the initial launch went up and then it kind of came down. There was also some economic political plays that went into the driving of that craze. But again, anything that is initiated will be parabolic. It just has to go straight up until there's some equilibrium price where you have supply and demand meet for that equilibrium price. I think this is definitely a first wave. I wouldn't call it a bubble. It's going to pop. There's going to be people who lose money that just threw all of it into individual equities or even ETFs. But long term, definitely is a good play, especially during the next economic correction or recession. We're going to see a lot of people reallocate their portfolios into the cannabis market, especially pension funds, whether it's Connecticut, or Illinois, or California. They're all broke. They need a higher return on their investment as well. Short term, I don't know where the market's going to go. Long term, I think it's only going to go up. But we have an artificial intelligence based algorithm that helps us with that. So you have to stay tuned for that next episode. But with that, we're going to roll this one up. I'm Josh Kincaid. This is the Talking Hedge. Don't forget to like, share, and subscribe, or don't. And I'm out.